feel you on that, baby, I ain't alone, okay. Let's roll, yeah, finish. You say you wanted to see me later, and your eyes told me you ain't pretending.
Holy shit, that's cringe as fuck, I ain't gonna lie. It's on fire as hell. What's goody? Welcome to another episode of my little investment series that I got going on. You guys fucking love that video, man. I swear on my life, bro, you guys love that shit. And I actually didn't know it was gonna pop off like that, but you know, it did. You know, I got 300 people who saw the video and all that stuff. So, you know, much love to you guys who commented and liked on that. And yeah, dude, that thing was popping. I ain't gonna lie. That CEO was crazy. Or that SEO was crazy. But yeah, let's get into this little thing. So I did get paid out here on my TFSA. You guys can see right here if you go to my TFSA account right here. Don't mind all this shit right there. You know, they were just random accounts that I opened and closed. So if you guys look at it right here, I did get paid by XDTE and QDTE as well as SPYI. So you guys can see right here that I got paid $20.53 Canadian and then $32.61 Canadian on on QDTE. And if we put it into my little spreadsheet right here that I made for myself, let's just kind of run down everything. I put the numbers in already, so 2053 and 3261. So basically what I'm going to be doing is I'm going to be reinvesting 1631 into QDTE and then 1027 to XDTE. And then the 20 cents is right here. You know, I might just reinvest the 30 cents or the 20 cents into SPYI again. Doesn't really matter. All right, bye guys. I actually noticed that I made a little mistake here. So the number of holdings that I'm gonna be dollar cost averaging in, this was just a little like mock thing that I did last week, and I forgot to change it back. But essentially, I am gonna be redistributing the XDTE and QDTE dividends to all the covered calls plus the actual ETFs and the REITs. So basically I'm just gonna have XDTE and QDTE be my like income generators, as you guys can see right here, right? These are my core income generators. But as I get paid out on my other covered calls, they will also act as income generators. However, the ones that I'm actually dollar cost averaging out of my pocket will be XDTE and QDTE, man. Fuck, I don't know why it's so hard for me to kind of differentiate between the two, but that's how it's going to be. So the dollar cost average is not going to be the $3 or whatever. It's actually going to be $2.42 for this week. So what I'm going to do is I'm going to reinvest this $2.42 to every single one of these guys right here. So let's go ahead and do that right now. This is also USD holdings, so I have to have the conversion fee, especially with like Wealthsimple. They have a shitty conversion fee. I will be switching off to Questrade, but they don't actually support like fucking functional share or fractional shares, so you know I can't really do anything else as of right now. So I'm gonna kind of have to just deal with the fees. But as soon as Questrade does have the fucking fractional shares, dude, I'm switching to that right away. Especially because they just started zero commission fees for ETFs for Canadian, I think. So yeah, that's a pretty good fucking deal as well. So you know, Wealthsimple, I feel like, like to compete with Questrade and all that, like they need to get rid of they need to do something with conversion fees because it's fucking insane. So I think with Questrade, they have like a Norbit's Gambit or something. So it enables them not to pay any fees at all. So I'm going to need to switch to that as soon as they have fractional shares, but they don't support that right now. So I'm just stuck with Wealthsimple right now. So, you know, Wealthsimple, you know, I'll plot to you guys, you know, go ahead and take my cash, you know, it's all good. But let's go ahead and DCA all this stuff right now. All right, guys. So I literally just finished doing the dollar cost averaging for all my other holdings. You guys can see right here that I was able to reinvest into my XDTE as well as my QDTE holdings. So that 50% went back into them. And then the other 50% was DCA'd into all my other holdings right here with the 240. My SCHD, I had an extra $50 hanging around, $55. So I decided just to lump sum that into SCHD, because why not? SCHD is literally the unicorn of dividend investing. So I'm going to put my 50 to that and kind of increase that allocation to SCHD. So in terms of kind of like the actual amount, 240 is really low. I'm not going to lie. But you guys have to keep in mind that it's only up from here. All right. The compounding is only up from here. 240 might seem very little right now, but you know, I get paid weekly on X and Q. So obviously it's not a predictable because it's covered call ETF. There's obviously going to be a lot of fluctuation within X and Q. So, you know, it's not going to be a 240 every single time and increase. But the holdings reinvesting into themselves. And then what I mean by that is, you know, MAA reinvesting into himself, PAX reinvesting into themselves, right? Like it's going to increase over time just organically through their own holding. But X and Q is going to be like the income generators for it, right? You guys kind of see what I'm doing here right now. So, you know, I expect that by the end of the year, right, like this is going to be a substantial amount of money. So 240 is pretty good for the first 2 weeks. I expect that at the end of the year, I'm guessing a light little, like, I don't know, like $10-12 or something like that. Like that's kind of like the area where I feel like it's going to be at. $10 or $12. I mean, if it goes more than that, fucking amazing, right? Like I'm not complaining if it goes more than that. I don't see it going under $10 for real though, because just the dollar cost averaging and reinvestments, like I just don't see it being under $10. But I do see it being around the 10 to 12, maybe 15. But I mean, shit, first year, it's gonna be a journey, guys. I'm telling you right now, right? Holy fuck. My bad. Just drink a little bit too much water, bro. I ain't gonna lie. But I will be releasing a video for you guys on how to pick the right covered calls, because there's a lot of fucking bullshit out there and there's a lot of shitty covered call ETFs, and I want to bring you guys awareness to what to do, because like it's not like financial advice or anything, obviously. It's just I want you guys to do research on covered calls, right? Because obviously the yield is very attractive. I mean, if you guys are getting like 100 yields and all that stuff, you know, it's pretty tempting to invest in something like that. But there's a lot more in the background than just the yield. Obviously you have, you know, whatever it's tracking, as well as kind of like the strategy that it has. So whether it's an out the money or an out the money or at the money, actually, fuck it, I'm just gonna tell you guys right now, all right? When you guys are looking for a covered call ETF, it's very important that you guys have certain criteria that you look for. So for me, there's two things that I really look for with a covered call ETF. The first one is, does it follow an index? An index that I like to follow is the S&P 500, a bunch of blue chips, or the NASDAQ, or just all three of them, which I have right now. The reason why you want to follow an index is the same reason why you want to follow an ETF rather than an individual stock. An individual stock obviously has a lot more volatility towards it. An ETF mitigates that volatility, right? There's less volatility there. And that's the same thing that happens with a covered call. When you follow a covered call that follows an index, there's a lot less fluctuation. When you follow a covered call that follows an individual stock, there's a lot more fluctuation. You could earn a lot more income and premium, but the risk is way fucking crazier by holding an individual, by holding a covered call that follows an individual stock. All right, that's the first thing. It's much more safer holding a covered call that follows an index than it does with an individual stock. And this just goes with like long-term income, right? Like if you want to have a covered call as income, then I highly recommend, I'm not telling you guys to, but I recommend you guys follow a covered call that tracks an index, whether it be the NASDAQ, whether it be the S&P 500, whether it be a collection of the biggest market cap stocks out there, right? You're essentially following the biggest market caps. That's technically an index, I would say. However, I do not suggest you guys follow covered calls that follow a specific stock. So like there's one like Misty. Misty is fucking crazy, guys. It gives you crazy yield, but at the same time, it follows a single stock. And if that stock goes to shit, the whole covered call goes to shit. So there's also there was Alti. All right, Alti was one, and that thing completely just fucking crashed. All right, I think this happened like this week or the beginning of or the end of last week. I think the reason why it crashed was because Warren Buffett sold his Alti position. So that's why there's this huge tank in the market. I believe it was the reason why, because that guy had hella fucking shares. He had hella fucking shares in that that company. So I think he like sold 100% of it. So, I mean, that thing fucking tanked, guys. And that's the reason why I don't like following a single stock covered call. My bad, guys. Yeah, it could go to shit just like that, guys. So with my S&P 500 one and my NASDAQ one, it was just a little fucking hiccup in the market, right? It was a little hiccup in my my cover call ETF. So there wasn't really a crazy change. But those of y'all motherfuckers who had Alti, that thing fucking tanked, guys. Like, holy shit, go take a look at it, bro. That thing fucking tanked. I mean, it's been tanking, but I mean, just look at it, guys. I'm telling you, I swear on my life, bro. I swear, bro, it like tanked, bro. So, yeah. Do not follow single stock covered calls, right? Like, it's not, you guys will fuck yourself over, bro. I'm telling you. And then the second one I look for is out the money strategies more than an at the money. So an out the money basically means that they're doing covered calls above the strike price. So what I mean by this is if the S&P is trading at $500, right, and then you're invested in this covered call that follows the S&P 500, the company will have a strike price above $500. So for example, it could be $510. And let's say they do a covered call expiry date every single week. So by the end of the week, if price reaches above $500 and reaches $510 or reaches $550 or reaches $700, whatever, you guys will have capital appreciation because you're selling at $510. Right now, you guys obviously limit the upside. If it goes to like 570 or 580 or 700, obviously you're limited on the upside, but it's way better than at the money because you have that capital appreciation. If price is 500 at the beginning of the week and goes up to 510, you collect the premium at 510, right? You don't collect the premium at 511, 512. You have to sell at 510. But you get the capital appreciation with that movement. At the money has a strike price at current price. Actually, let's just say, for example, right? So the S&P 500 is at $500. And at the money covered call strategy will have the strike price at $500. So at the end of the week, if price goes up to 510, it will only sell at $500. So you get no capital appreciation with that. Even if it goes to $501, you guys will get no capital appreciation. You're selling the premium at $500. If it goes under $500, obviously you collect the premiums off that. So you guys can see that long-term wise, it's not sustainable if you guys are going for, if you guys are depending on these for your income. So I highly recommend you guys follow an out the money strategy and you follow an index. Of course, do your own research on this. I'm not saying that you guys have to do this. This is not financial advice. But whatever you guys do, do your research on it right now. Because for me, that's what I read upon. That's what I've seen YouTube videos on. And those are like the two main things that I took out of it and that I really want to make sure that I follow. So you guys can see right here that these these covered call ETFs right here all follow an index, or they follow kind of like an underlying strategy that's more than one stock, as well as they're out the money. So if you guys look all of these up right here, they will mention that it's out the money, or they have, it will say something like the potential for appreciation or some shit like that. And then obviously you'll know if it's a single stock or not because they'll say what it follows. So for example, IYRI follows the real estate high income. So this is going to follow your realty incomes. This is going to follow your Vicis, your ADCs, your Prologis, your Equinix, your AMTs. I mean, just look at on Seeking Alpha or whatever, right? Like you'll have a number of holdings, and if it's more than one stock, or you know, it follows a bunch of different stuff, like the more the better. So you know, that's what I suggest for you guys to do your research, right? Like don't go into this blindly. Like don't just copy what I have right here. Look at it yourself, see if you like it, because you know the management fees for XDT and QDT are obviously really fucking high, and they're generally high with covered calls, but with XDT and QDT, I think they're like 0.95% or something, so it's pretty fucking expensive. But you know, they do weekly distribution, so it kind of justifies for that price. But I highly recommend you guys do your research on what you guys want to look for in a covered call. And with me, I just told you guys that what I look for is an out the money strategy, and they follow an index. Those are the two must haves. And I feel like, you know, I've set myself up for success with this kind of this portfolio right here. I might do some tweaks down the line. Maybe I might take away these REITs, maybe I might not. Maybe I might reduce some of these covered calls, but as of right now, I'm just keeping it with these guys right here. And yeah, I mean, there's nothing else for me to talk to about. I do have $134 that I need to take out of my bank as my actual out-of-pocket DCA. So I might do that tomorrow after work or something, but as of right now, I'm just gonna stick with the dividends that I got today.
We smoking broccoli, but she's smelling like a rat. Coming on, her name is Angel, but she's far from God. Loves me in the business.
Gotta do the Shador.
They tryna get God.
Hold on,
her name is Angel, but I'm trying to do more than bust down your wire. Who's out there for me? Who's out there for me?
I hope y'all fucking enjoyed the video, man. I swear I love y'all, every single one of y'all little guys. I love you.